Ryan Mallard here with a stock market crash update. We've seen the volatility really come down a little bit here over the past month. It's the summer months, the volume's low, the price action and the price range is actually pretty tight compared to what we've seen for most of this year. Now, we have earnings coming up this week. We have the CPI coming out on Wednesday. Big banks are going to be reporting, or at least starting to report. Not all of them, but just some of them. And then we're going to start seeing next week some of your tech stocks coming out like Tesla and Netflix. And then as we get into that last week of July and the first week of August, you're going to really see your mega cap stocks all reporting. So lots going on between now and the end of the month and the start of August. Now, over the last month, it's basically been a lot of consolidation. We haven't seen a big price move. We saw a little bit today with a 2% sell-off in the Nasdaq and 1% in the S&P 500. But are we getting ready to start the next leg lower, or should we still expect that dead cat bounce that hasn't really materialized? Yes, we're off the lows. But over the past month, there hasn't been a definitive direction. It's been more about like a give and take with this market. There's not a lot of action. And so there's pros and cons for both sides of the argument here, and we're going to go over both, and I'm going to tell you which side I lean towards most for the weeks ahead. Now, before I get into that though, make sure to like and subscribe to this channel, and make sure you hit that little bell so you can be notified as well. Click the join button down below so you can get my stock market research each and every day. So let's go ahead and jump right into the S&P 500 here. SPY is the ETF that we're going to focus on first. Now, we've got this decline channel. If you've been watching my videos for any amount of time or my live streams, you know that this has been the channel that I've been following. This is the ultimate downtrend in the market. We haven't tested it since the March 29th high. So it feels like it's kind of overdue, but we're just not getting that move. But within this declining trend line, you also have a secondary declining trend line, and it seems to be getting a lot more action over the past couple of months than the much bigger downtrend off of the January highs. This one off of the March highs is very close to getting tested here. But what you also have with this market is a series of bear flag patterns. And these bear flag patterns, when they emerge, and they emerge following a period of consolidation, have led to much bigger legs lower in the overall market. So the first one here, and that's the current one that we're trading in, is very close to confirming. So you have one bear flag pattern right there. Now the second one, this was one that has already been confirmed. But it just shows you the history with these bear flags and how well the market has respected them and signaled lower price action. And then you had a third bear flag pattern, and this one was a little bit on the steeper side, but still, nonetheless, it confirmed to the downside and gave us lower pricing before finally giving us a dead cat bounce. So now we're seeing another bear flag pattern. And so we need to watch this 377 level and see whether or not it breaks. If it breaks, that's going to be your signal that the next leg lower is starting up here, and there's a good chance we're going to see much lower pricing in the market. And this also follows the pricing action that we have seen going back to March, where you get an initial leg lower, you get a mini bounce, and most people start to get sucked into that little mini bounce before we try to make an attempt at retesting those lows before we get the ultimate bounce. We've seen that play out back in February and March. We saw it play out in May with the initial low, followed by an attempt at a dead cat bounce, followed by a retest of those lows before you get a significant bounce again. We saw it again here in June, making the new lows, attempt at a bounce. But the difference here is that it really struggled to put in new highs. In fact, the last 2 days it's been lower, and it really puts into question whether or not the bulls are just flat out running out of momentum and capital to buy these dips with. So that's the SPY. Now let's look at the Qs, because this is the one I'm probably the most interested in right now. First, you have the declining trend line off of the December highs. And then you have the parallel channel down beneath it. So you have this nice declining channel to work from. Now, in the last update, I talked about the fact that we may be seeing a bearish wedge flag pattern forming, where you have this declining purple line here that creates the wedge pattern for the Qs. It broke out of that, but what makes it even more interesting is the fact that despite breaking out of it, it's really not going anywhere fast. You can see there's this middle channel band here, essentially. It's not perfectly parallel with the other two levels, but it is certainly a resistance level that we got to pay close attention to. And so far, it has tested it on multiple occasions and rejected price, with the most recent one being on Friday when it rallied right into it, and then it had to sell off today. So if this middle band holds, that's where you have a potential retest for the Qs down at this declining support level, and that's likely to be around 260 or the high 250s. Now the bullish scenario here, and I know I'm giving you guys both sides of the equation, but that's the intention here. And I'm going to tell you what my opinion is going forward and how I look to play it. Right here, you have what might be just a basing pattern. I tried to play this bullish wedge pattern. I couldn't get into it. I didn't want to chase after it because of something like today happening where you pull back 2% and all of a sudden you find yourself underwater on the trade. Didn't want that to happen. So I held out. I didn't make the trade. And now we're sitting at a scenario here where perhaps we're just sitting at a new basing pattern where we may break out above this purple line here. This would be short-term price resistance. And if that happens, then a move up to the 330s would be in the cards. Of course, first it has to break this 305 area. But once it can get past that, it definitely seems possible for the Qs to make a run towards this 330 level. And if it does that, it's an incredible trade setup because all you got to do is put your stop loss below the lows of today and then wait for the breakout to happen. So you get in around 296.25 or 296.50, and then you put your stop loss below the lows of today, and you've got a really good reward to risk ratio, especially if it can actually climb up to this declining resistance level. Now remember, you have earnings coming out starting this week. That's going to set the tone for the market in a big way. I think a lot of people are pessimistic on the earnings, and they rightfully have a good reason to be so because the economy, it's not good. We've got interest rates going up at a pace that we haven't seen in decades. And you have a lot of stocks that have already pulled back 50 and 60%, already announcing that they're not expecting a good quarter here. And so yes, there's a very good possibility the market's going to puke all over this earnings season. But what I have tried to do is I've tried to outline the two different scenarios here. One, the Q's bouncing off of this declining middle band right here, as it did today. This is one scenario for getting short. The other scenario would be as if, okay, if we cannot continue to the downside and instead we break above this price level support at around 296.25 and we can clear that level, we're also clearing this declining trend line right here too, or the middle band that I've talked about. And as a result, it sets up very nicely for a run up to the 330s. And once it gets into the 330s, that's where I would start to get very bearish again on the market. So here's the funny thing is it's been a couple of weeks since I've made a trade, not because I haven't wanted to or have been away or anything. That's not the case. I have put out many trades, but they won't trigger for me. And that's okay. I'm not going to force my hand on the market. I'm going to let the market take me where it wants to. In fact, today I had a trade set up for QID. I got within 1 penny of it hitting. And then it pulled back and I never got into it. And that's okay too. But what I'm going to do is I'm going to stay disciplined in this market. And right now, I had a bearish setup for this morning. I may even have a bearish and a bullish setup going into tomorrow and let the market decide which way it wants to take me. Instead of me trying to put my will upon the market, I'll let the market decide for me. And that's really the mark of discipline when it comes to trading in the stock market, is that you're not trying to put your ego out there to think that you can rightfully and consistently predict the direction of the market going forward. Instead, let the market tell you what its direction is going to be ultimately and follow its lead. As it pertains to the CPI report that comes out Wednesday, what I would essentially expect, if the number's hot, if it's above expectations, it's going to give the Federal Reserve the leeway to possibly raise rates at least 75 basis points, maybe even up to 1% at the next meeting. Now, 1% seems far-fetched at this point, but the odds of it happening will increase as a result of a very hot CPI number. If it comes in below expectations, I think there's a good chance that you're going to see a lot of talk and chatter that inflation's starting to ebb. It's starting to cool off. We maybe have seen a peak in inflation at that point, and then you're going to see the market rally. In either case, let the market be your guide. Follow its lead. Don't try to force anything upon the market. If you enjoyed this video, make sure that you like and subscribe and click join button down below and tell me in the comments below, what is your expectations with the CPI report? You think we're coming in hot on Wednesday, or do you think that it's going to finally have peaked and we're going to start seeing a little bit of a retracement there in the inflation levels? Let me know down in the comments below. Thank you guys, and God bless.